The Office of the Pension Funds Adjudicator deals with complaints from members of retirement funds. In its annual report, gives important insight into the issues that members are experiencing where the retirement funds can improve the member experience. The most common query that the adjudicator's office deals with relates to the payment of benefits. Often funds are found to be at fault, but there are also many cases where members' complaints arise from a lack of understanding of how the retirement funds are required to operate. Research done over several years by various providers points to most retirement fund members being hopelessly unprepared for retirement. The purpose of a retirement fund is to give members a vehicle that they can contribute over their working lifetime so that when they are no longer able to work, they have a source of savings to provide income in retirement. It has been quoted that less than 6% of South Africans can afford to retire. In the Smart Sense research done in 2019, the records of 112,000 members that NMG administered were analysed. At that stage, it was calculated that the average replacement ratio across these members was 35%. This meant that the average active member could expect an income after retirement that was 35% of the salary that he or she is expected to be earning before retirement. The data analysis done by NMG's actuaries in 2021 covered that the data of 160,000 members as of July 2021, that the average replacement ratio had reduced from 35% to 32%. You're earning 10,000 today, tomorrow I put you on pension, your salary, your income that you saved over 40 years will give you 3,500 Rand a month. From 10,000 to 3,500. It's actually dropping now to 3,200. It's getting worse. The traditional rule of thumb is that members need to have saved around 15 times their annual salary by the time they retire to retire comfortably. The NMG Smart Sense report compares the members' fund credit, how much they've invested, to their annual salary. When the calculations were done in 2019, the average member had 1 times their annual salary invested for retirement. In 2021, research has shown that the average member across the NMG database had only 3/4 of their salary invested for the retirement. In the last year, the retirement funds that NMG provides consulting, administration service to have seen a marked increase in the number of death claims being received. The insurers that NMG deals with have given feedback that since the start of COVID-19 pandemic, they have received significantly more death claims than was previously expected. The value of these death claims is higher than was experienced previously as individuals with higher salaries and therefore higher levels of cover pass away. At an annual review, NMG's consultants are seeing insurers increasing premium rates by as much as 60% because of the increase in the claims experience in that scheme. Although the insurers consider these claims experience at scheme level, the experience at industry level and at the overall book of business, the insurers are aiming for sustainability to deal with the negative claims experience into the future. So NMG's sister company, NMG Consulting, is a global specialist in consulting, insights, analytics across asset management, wealth and insurance and reinsurance markets. NMG's consulting research interviewing independents from 35 South African insurers shows that the majority interviewed, i.e. 43%, expect COVID-19 to contribute to a decrease in profits. Almost every insurer in this group has experienced worsening claims experience as a result of the number of increase in deaths. When premiums are increasing, it's important to consider whether the most appropriate benefit structure is in place for the fund. It's not enough to continue to provide benefits that don't meet the members' needs. In fact, member engagement might be needed to better understand what the members' needs are. Many of the NMG clients are looking at their funeral cover with new eyes. They are reviewing the levels of cover and also which employees have this level of cover. Several employers have introduced extended family benefits to their benefits package. COVID-19 pandemic has reshaped our personal relationships in unprecedented ways. Life in lockdown has brought many of us into closer contact with our families, whilst forcing us to distance from others. Financial realities in many families means that the burden of supporting retired individuals frequently falls on younger family members and children of retirees. Many South Africans are financially supporting their children and their parents on their income. You may be familiar with the term sandwich generation, IME, that describes individuals supporting their children, parents, and/or older dependents. Many South Africans have experienced periods where they are unable to work and earn income through lockdown. In March 2020, the FSCA acted very quickly to confirm their commitment to the principles of TCF and encouraged financial institutions to assist customers affected by lockdown. The FSCA supported retirement funds by prioritizing the approval of rule changes that provided contribution relief for temporary periods where the employees are unable to pay contributions to their retirement fund. Several funds that NMG provides services to changed their rules to allow for a reduced contribution rate. It's understandable that many members chose to reduce their level of contributions that they were making to their retirement savings when these options were offered to them. In NMG Smart Sense research done in 2019, the average gross contribution made to the fund was 12.7% of their annual salary. This reduced to 11.65% in the 21 research. The net contribution also reduced from 10.7% down to 9.47% of annual salary. It's essential that when members are given the option to reduce their contribution to the retirement fund, that they are made aware of the long-term effect of a low contribution rate on the income that they can expect at retirement. Projection statements can assist members. They should also be guided by the retirement income calculators that are readily available to assist them in understanding how the contribution rate will affect the retirement income that they can expect one day when they retire. A retirement fund's communication strategy should be guided by data analysis showing where members are experiencing issues. It is critical for a retirement fund board to know whether their members are on track to receive adequate income in retirement. It is not good enough only to benchmark against other funds. The anticipated member outcomes need to be top of mind of the board's goal. Data analysis can help the board design, measure the most appropriate benefit structure to meet the members' needs. The data is showing that the retirement situation is dire for so many people. The question is whether people know just how serious their situation is, and if they did understand whether it would affect the choices they make, for example, when they change jobs. Traditionally, retirement funds have focused their communication on encouraging members to increase contribution rates and not access the money on withdrawal when changing jobs. It could be argued that these messages haven't improved the retirement fund engagement with members or had much effect on the outcomes. For many, the topic of saving for retirement seems to be very far away into the future and not extremely exciting. For many of us, it's easier to avoid the unpleasant topics in life, like whether we are contributing enough towards retirement, while we hope for the best outcome. The FSCA's intention is that all retirement funds to provide members with a projection statement that meets certain minimum requirements. The question is whether members pay attention to the content of these statements or understand what the fund is communicating. It may be that a one-on-one session is needed to talk the member through the information that is being communicated and explain what action is needed for that individual. It is a challenge in that there's just not enough people qualified to deliver this type of message. It seems like the industry needs to find a better way that will better reach the needs of younger millennial audience. It seems like the challenge to provide meaningful financial information and information is wider than just a challenge for the members' retirement fund. It's a challenge for the financial services industry. It's a challenge for employers whose workers are distracted by the lack of financial well-being. And it's a challenge for a society where people aren't saving enough. More than 2 out of every 3 adults in Africa are financially illiterate. Women are disproportionately affected by financial illiteracy. Simply providing access to financial products does not lead to active financial inclusion. Financial competence is part of human dignity. It is hardly taught at schools. Finance content currently is available is complex, boring, and often biased. Existing education initiatives are ineffective, expensive, and not measurable. The financial landscape is constantly changing and requires ongoing education. We at NMG believe that financial education can be brought into the employee benefits package to create direct member engagement with members and build financial knowledge and trust. NMG Smart Alec is a WhatsApp-based interactive tool that chats to the individual as if one of your contacts. It explains basic finance concepts like banking, bank accounts, payments, savings, as well as entry-level and sophisticated investment portfolios, short and long-term insurance. Easy to grasp, story-driven educational content is used to equip individuals with knowledge to help them understand financial concepts in English, isiXhosa, and isiZulu. The aim is to make sure that as many people as possible are able to truly understand finance, that they make good decisions and become financially independent, leading to true financial inclusion.
Being financially knowledgeable is the foundation upon which future plans can be drawn up and achieved, resulting in the ability to live the life you want to live and not the one you have to live. Now, how do you make the right decisions if you do not understand all the financial products and the big words that come with them? Hello Smart Alec, a user-friendly financial education platform that uses chat messages to teach you about various financial tools through WhatsApp. Smart Alec uses simple, clear language that is personal, easy to understand and remember. It's like chatting to a friend whilst learning at the same time. Smart Alec is designed for people in Africa and is open to anyone who has WhatsApp. To get started, just save the number +27 71 455 2782 or scan the QR code with your WhatsApp camera and say hi. Type in your unique access code. Choose a course you want to learn. Select your preferred language: English, isiZulu, or isiXhosa. Select your province, and then pick a character that you are drawn to and learn through their personal experience. With Smart Alec, you can access and educate yourself on banking, budgeting and payments, loans, interest and credit bureaus, investing, retirement funds, insurance and healthcare, scams, pyramid schemes, and more. You will be given bite-sized explanations and asked simple finance-related questions. And as you continue to answer, you will master new and relevant financial terms that will expand your understanding of how the world of finance works. Got distracted? No problem. Smart Alec gives you the option to pause and continue whenever you have free time. And in case you forget to return, it'll give you a little reminder to get you back on course. And when you finish each course, you will get a certificate. It's easy, personalized, and just like chatting to a friend on WhatsApp. Try it now by scanning this QR code with your WhatsApp camera and using the code NMG. Terms and conditions apply. The NMG South African group of companies are authorized financial service providers. For more information, contact us via email smartalec@nmg.co.za. NMG Smart Alec, Powered by FinEasy, finding a better way.